All right, ladies and gentlemen, I hope you had a wonderful new year. The watch list is back in full effect, and I hope you missed me as much as I missed you. But now we have to talk about why the stock market is going to make people freak out in 2024. It was the first trading day, and we woke up to a barrage of events. I'm telling you, I have it on the keys, but everything from natural disasters to big downgrades, there was a ton of different things, and believe it or not, it was one of the biggest single day drops on the NASDAQ in a while. I believe about 2 months. Now, here's the thing. We are starting off the year in January, and a lot of people are bringing up what happens in the first couple of days, pretty much the first 5 days of the year. They say that's how the year is going to go. Now, do I agree with that? We're going to talk about that here a little bit, but before we get into any of that, what I want you to understand for 2024, there is a lot of expectations. There is a lot of people going off of the heels of what we experienced last year, the end of it. But what I got to remind you is, remember how we started 2023. Every month afterwards, a lot of things started changing really quickly, and pretty much by the end of 2023, everybody ended up wrong. Even myself, there was a very small minority of people who were like, yes, this is exactly going to happen, and that's what happened. So we got a lot to talk about. We still have data for this week. I'm excited. We're actually starting off this week with big data and non-farms on Friday, so we're going to cover all of that, and then you even have the Fed minutes tomorrow. So before I get into any of it, for the fact you haven't seen me in a couple of weeks, Chad, let me get a ceremonial like on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We are live every day, and we're going to see you there, baby. Free 99. Run it.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Well, right off the bat, like I told you, there was a lot of craziness, and you could see it if you go and look at the NASDAQ, the S&P, even the Russell ended up down. But the funny part about today is the fact that we moved a lot, but we didn't. Pretty much by the end of the day, you ended up at the same candle you were at right when we opened up. So most of the move happened pre-market, but now what actually happened, this is where it gets crazy. We had Middle Eastern tensions. The Red Sea had Iranian ships sent there after a weekend debacle of the U.S. shooting down or shooting at the ships. I guess they shot down. Okay, you get what I'm saying, but that was a big deal. It had oil all over the place, even though oil ended up negative on the day. At the end of it, you had a natural disaster in Japan, a 7.5 magnitude earthquake, even one throughout the day. They did calm down on the tsunami warnings, but that was a big deal. It even feeds into the yen, affecting supply and demand. Then you had the strongest dollar in almost a year. This helped even bring down gold a little bit. Then there was news of more chip bans or escalating the chip bans with ASML and moving forward and requesting that companies don't ship stuff to China, even though the full ban wasn't supposed to come into effect for like a couple of months now. And then on top of it, you had one of the worst days in 2 months for Apple as they got downgraded. So there was a lot of other things going on, but I'm telling you, to start off the year, this was absolutely wild. I even said this on stream at other points, like maybe the year before that. You go throughout history. If we opened up like this would be a lot to digest, but believe it or not, it seems like we have been kind of used to a lot of craziness to start off, and then on top of it, the market is still focusing on a lot of what got us here towards the end of last year. So this is where I want to start off. I'm bringing you to the second key. A lot of people are getting caught up with the statistics and the seasonality of this year. They're saying the first 5 days, they're saying January is usually good. If this year, the election, and there's so many things that people want to be looking at, but I'm going to keep it very simple for you. This whole entire year of 2024, this is what is going to make people freak out, because you may get a bunch of events like we just did today, but the market is going to be focusing on two things. Number one, the most important it is a policy shift. We are talking about Jerome Powell finally ending that rate hike cycle. Remember when he started raising rates, he ended one cycle and moved into saying, okay, no more low rates, we're going up. You saw how the market reacted, and now, 2 years later, a little bit longer, he's getting ready to end it, and that is what people are thinking about. And if that starts to move, that is the most important thing. Whether it happens, when it happens, how it happens, that is what is going to determine all of this year. Maybe there's a lot of events, maybe there's a black swan in between. Think about SVB last year. We may get a lot of things we have to deal with, but ultimately, this will be the North Star of this year in terms of what is actually going to happen. Beyond that, you also have an election. Would I say it's the most important thing? No, that's why I'm telling you so much about the policy shift, but this is very important. The one thing I would give to cement the fact that the policy shift is important is really think about these last couple of months and how we got here. Without this idea or the thought that the policy would be shifting into this year, that dot plot that we just experienced, remember that one on the last FOMC? We wouldn't be here without it. That was a very big deal. So the way I'm looking at it, 2024, it's all about the policy shift, how it happens and when it happens, if it actually happens, and then it's going to be about the election. You're going to get a pre-election reaction and a post-election reaction. And am I saying that the election is the most important thing? No, I'm reiterating that once again, but the way I'm breaking it down, pre and post-election, you are going to get a lot of actions, and maybe through reacting to the election, we get other events that are created for the market that get people responding, whether it's somebody gets elected and they want to start changing rules afterwards, or leading into it, if people want to support their position, you oftentimes get a lot of stimulus, not direct payment checks, but real just spurring of the economy, government spending, things leading into the election to kind of solidify the stance of this is why you shouldn't vote for the incumbent. So we'll see how it all plays out, but this is how I am breaking down 2024, and unfortunately, there are so many things that are going to happen. These are going to be the two main pillars, but that's why I think a lot of people are going to freak out, because I'm sure we're going to deal with so many things just like last year, but then when it's all said and done, these big pillars, they may be the checkpoints that move us up or down, and then we really see how things are going to be playing out. So that's the second key I want you to focus on, but to give you this, because a lot of people were asking me, and this is the first watch list of the year, what do I think is going to happen? People are asking, where do you think the market's going to go? Is it going to end up here or not? And like I told you, at the beginning of last year, myself included, a lot of people were very confident about certain things, and they never materialized. Not anybody could have forecasted the banks coming down, and the fact is, we would end up higher after all of that happened, that we'd enter into another drama overseas. There would be another war, and oil would be down. Even how oil ran at the end of last year and came down, and the fact that it's not even showing anything about the economy, that job losses did not go up at all, that inflation would actually come down, stay down, and then leave us in this position. There's so many things that people didn't think were going to happen, and then they ended up happening. And that's why coming into this year, sadly, I just think that this year is a long continuation of last year, sadly. People are still going to be talking about soft landing, no landing, hard landing, and the fact is there will be a lot of events and things we cannot foresee now that will occur, both good and bad, but at the same time, we're probably going to have those events, and then if Powell comes on or the data starts to show things, people are going to start clinging to that. So I've learned not to be too confident, and I really still believe that a hard landing is on the table, but we have all seen how slow things move and the power held by the Fed, even government spending and some of these new things that they've been experimenting with. We have to watch how that all plays out, and sadly, I think this is going to be the long, drawn-out drama of last year, still waiting on the shift, everybody analyzing it. Maybe Powell flip-flops, maybe he doesn't, but at the end of the day, I think what happens with Powell and that policy shift, and then what happens with the election, those will probably be the more bigger drivers. Whatever we deal with in the meantime, yeah, it may move things, but I don't know if it will change things materially, so I don't know. Some of you may like it, some of you may not like this. The good news is that you're prepared for it, especially if you've dealt with last year, and that's why I'm saying, man, maybe take advantage of high rates, diversification. There's a good plan in place, and you saw how things played out. The bad part, if you want something new, Unfortunately, we may not get that, but if I get surprised on that, we will see what happens. But that's what I want you to focus on. This is what I'm talking about for the whole year. But now, the beauty of the watch list, baby. Let's talk about what's happening now in the next coming days and the rest of the week. The whole rest of this week, we are going to get our first set of big data, and it should give us an idea now. Remember, we still don't know. Like I'm saying, a continuation of last year is good news, good news. Is bad news, good news. Is good news, bad news. That's what we want to get a feel for. And until we start getting these new sets of data, until we have Powell is on January 31st. That will be the biggest event of the month. However, earnings is going to start happening. We have earnings even coming out this week, bank earnings next week, then Netflix the week after that, and then tomorrow, the big focus for tomorrow, it's going to be the Fed minutes. So we're going to get that at 2 p.m. Eastern, but remember, the last Fed meeting was kind of a dud as far as language was concerned. And what do I mean by that? Remember, it wasn't like they made big changes and the minutes are going to go and talk about how people got there. It was all about the dot plot, and that's what we got to be paying attention for tomorrow. But in a weird way, I'm not expecting too much. Maybe with some of the jitters at the beginning of the year, even liquidity returning, we may get a big reaction, and I do think the bonds will be a tell, especially since the rate hike odds did cool down, or rate cut odds, they calmed down today, even though they were running in the last final days of the year. But when it's all said and done, I do think the non-farm payrolls on Friday, that will be our big driver. Our first set of jobs reports, people are expecting it to have a lower number. We didn't see that last time, so if that's going to paint a Goldilocks picture or it's going to show the lagged effects of tightening, maybe we'll see. And maybe they make new changes for 2024. Remember how they do the metrics and how they guide them. Maybe revisions this year, keep in mind, they can revise them lower, and that may be something we see if there's a recession. If not, then all of this stuff is going to be golden. So for the most part, we have data tomorrow. I would kind of tread slowly. If the market moves fast with it, try to understand the reason why, and maybe it'll give it a burst of wind and then it sails into the non-farms. But ultimately now, the real thing you should be watching for this week, the non-farm payrolls, I think that will be a big driver. And that one too, if that one comes in lower, I think that'll be good news. If it comes in hotter, too hot, I think it might freak people out, but not to the point where we start panicking unless other events start going on. So, Chad, I hope you're ready for this year. It's good to be back. It's good to have you all here, but hopefully we could learn a lot from last year. And in a way, we don't really need to expect anything too new, but that patience and seeing how the market is and sometimes not fighting the market, we're going to have that balance. And then ultimately, the long term will take care of all of it. But now, let us get into the plays. So, right off the bat, I got a couple of plays for you. I did make a few trades today. I closed out a VTRS. We had a trade on that for a PDUFA towards the end of the year. I got like 120 profit. Nothing materialized. And then I did a day trade on oil today. That was my first trade of the year. And you'll see what the first play we're going to talk about. But if you remember my gold play, I sold out of that one. I sold out of CYTK. This is all while I wasn't streaming. So I let everybody know on stream, and the stream alerts got it as well too. But closed out of those plays. I closed out of the Nike and the FedEx, and we were all good to go. So besides that now, as far as play number one, I'm starting with the first play that I made, baby, oil. So I made a play on CL. I flipped it earlier today, and the reason was oil was gapped up 2% off of that Red Sea drama, the Middle Eastern tensions, and even throughout the day, there was the killing of a Palestinian leader, and then I think it was it Great Britain or somebody else's ship got caught up in something, but believe it or not, even though oil was up 2% by the morning, within like an hour of the day going on, oil went negative. So I made a flip when it went red. It bounced up. I took a quick $250 profit, but then I got back into oil at the end of the day, $1 lower than where I bought it. I grabbed one CL contract, and the reason why now, I think these oil flips are going to be good with all of the tensions going on, especially when oil does. You've watched this towards the end of last year, 5, 6, 7 down days. It's all red, 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 red. Then you get some of this drama. It's really good there to buy into the downside. However, I'm in at like 70-40 right now. This thing could go back down to 68 or lower, and with leverage on a CL, that is very painful. But the way I'm looking at it, if you could stomach these moves, I do think the back and forth plays until we get an idea or until data and the real 2024 road, or people start feeling confident on where the road is going to go, I think oil is going to have a lot of back and forth. So this is going to be my first play. I am holding one of those contracts on CL. As far as play number two now, this one I love, but I had to take the profits on it. It was gold. And why? Because I had just under $6,000 in profits. It was a very, very good gain. So I said, hey, let's take it out here before the end of the year. We'll see how things operate. And I'm thankful that it did today with the dollar, because this is the thing. When you're watching gold moving forward after a huge move, this was the biggest move on the dollar since March of last year. This was pretty big, and that will affect gold, but not to mention you have things like the yen and other things that were affected by everything else going on. There was so much to digest today, but the way I'm looking at gold, I still think this is one of the better rate cut plays with everything going on, or if there is a hard landing, it kind of accounts for both. Either they cut rates and things become easier for commodities and gold, or we run into a recession, gold's already near all-time highs, and then people freak out and they start piling into it even more. So I am looking for a double dip. The price I'm looking for, 2040 or 2020, these are on the GC futures. The lower the better, but maybe it goes below 2000. But the way I'm looking at it, we had a nice run on it. Let's let some things happen this year. Maybe it runs and I'm not able to get a good double dip at a low price, and that will be my fault. Other than that, though, if I can find a good double dip, I do think this one will be a good one. So that is play number 2. And then finally, play number 3, baby. I got 3 plays for you. JP Morgan, Bank of America, and Walgreens. Why? Because earnings are literally right around the corner. You have JP Morgan next week. Walgreens is this week. The banks are also next week. And the way I'm looking at it, it's not going to change the market too much. It's not usually like bank earnings. Even when they were bad, it's not like it would bring us down like big tech failing and then have a huge weighting on the NASDAQ and all of that. But it will be something that will affect the industry. We've even been talking about KRE. People are talking about rate cuts and how these banks feel, even demand. We're going to see a lot, and this will be the first sign that could either lift some of the bank stocks that haven't recovered, or we may find out it's going to be a bumpier year for the banks until the policy actually changes. And then again, that's word to the whole policy shift. So that's play number 3. The only final point I'll throw in there, Walgreens. A lot of people asked me about this one today, and the way I'm looking at it, we made an average down. Even like Colt Sister, believe it or not, that account, it's like up 6% on Walgreens. So they moved up a lot here. This is over 10% or like 20% just in the last couple of weeks. So the way that I'm looking at it, we still got a long-term deposit. If they do bad and drop, this could definitely be a target. Again, a good name. We'll see what the earnings, kind of the vibes it gives us afterwards, but it'll definitely be trading lower, having a high yield. If they do bad at earnings and go down, I would be looking to buy some. But other than that, if it shoots up after earnings, all of our averages should start to work for us, and then we'll see it do its thing, and then you could chase it if you want to, but other than that, I might be chilling. So besides that, the only other plays, Pfizer, those shares that we were down on the flip shares, they have now came back into the green. I had $1 a share at one point, and then it came down, but I'm still writing this, and there's a healthcare conference they're going to be speaking at, and if you didn't see it today, all the healthcare stocks went crazy. Biotechs, XLV, anything you could think of, Humana, health insurance, they all went crazy. So this could be more word to that rotation and everything else we'll be seeing. So we'll be keeping an eye out for that. But other than those are the only plays I have. Still holding a couple of plays from last year, but for the most part, we're coming in. I got an ES short that I'm hedging with the Russells. I'm still holding those Russells. Yes, I know. I still believe in the small cap rotation until we get a little bit more info. So I have an ES to kind of hedge some of the gains, but got to take some profits at the end of last year. Still holding up very good. We had a nice comeback, and now hopefully we could humbly take everything in. If things change, we'll take it as it is, but hopefully we could use the backdrop from last year and see what happens and dominate. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to remember, you got to learn to handle the failure. You got to learn to handle wrong. You could have the keys to the prison, and it could open up. You got to let yourself out, baby. It's a new year. Time to start over, and hopefully you lead with a good foot, and that's word to the long term. Again, you could do all of it. You are not a one-trick pony. You could long term. You could trade. You could have businesses. You could work. You could do all of it. Do not pigeonhole yourself. But let's get it, Chad. Drink that water. Stay hydrated, healthy, all that good stuff. And I am so excited to be back and see you in the morning. Oh, I know you said see me right now, Chad. Let's go. All right, peace out.